So most of us already know that Bitcoin has this digital gold narrative behind it. And it goes a little something like this. Because Bitcoin has assets that have the fundamental characteristics to precious metals such as gold, i.e., and more so, honestly, being decentralized, fungible, scarce, and difficult to create, i.e., not controlled by a central authority, accepted around the world, and being deflationary in nature, Bitcoin is due to become a new age digital precious metal asset, right? With a market cap of gold given some time. That is the narrative. However, according to the Kansas City branch of the Federal Reserve System, Bitcoin may be getting way too far ahead of itself with the gold narrative. And they largely tear this notion to shreds in this recent document published by their central bank office. So in a note published on April 15th, and this has gone mostly unnoticed by most of the crypto community, the Federal Reserve Bank of Kansas City claimed that Bitcoin is decisively not a safe haven, noting that Bitcoin has acted more like a full-on risk asset than anything that could be possibly considered approaching digital gold. The KC branch of the Fed cites Bloomberg data showing how Bitcoin operates with a positive correlation to the S&P 500 index to a level significant at the 5th percentile. Then, during periods of economic stress, assets such as 10-year treasury bonds or gold, which have typically operated with a slightly negative correlation to the S&P 500. However, this shows that Bitcoin moves with a traditional market like the SPX and cannot be considered, therefore, as achieving safe haven status because it doesn't actually move with gold in times of economic stress. Now, many would agree with the facts presented by the Fed in the sense that, yes, Bitcoin still does show correlation with the S&P, and it's still subject to wild price swings and volatility, so it's not so much that BTC is not digital gold. It's more a matter of it's not a digital gold yet. It's in the process of arriving at a safe haven status, which takes time. Gold has been traded for thousands of years. Bitcoin's been traded for 10. The other thing to note here also is even with so first off, citing volatility is arbitrary, right? Because gold moves at times with greater volatility than cryptocurrency. So does the S&P 500, right? If anybody's been paying attention, right? The gains week for week on those seem to be fairly similar lately. For example, in Bloomberg's latest edition of the Bloomberg Intelligence Report, their section titled Crypto Outlook featured a key takeaway that Bitcoin is slowly but surely maturing towards trading like gold does, a sign that it is indeed becoming digital gold. In that Bloomberg report, they did bolster a case for Bitcoin being on its way to becoming digital gold, specifically citing the adoption of BTC futures markets on the CME, how volatility is continuing to decrease on a macro scale, the growing correlation between gold and cryptocurrency, and finally, how interest and users are continuing to grow on the BTC network day after day. Then, of course, there is the block reward halving set to arrive in less than a month, which means Bitcoin's inflation rate is beginning to seriously dwindle with over 18 million coins. The majority of the supply has already been mined. And most of the world's fiat currencies are currently on a runaway printing spree in recent weeks, meaning that Bitcoin is growing into the narrative of scarce digital asset even more so at the current time. So while Bitcoin might not be able to be considered digital gold just yet, there is a strong case here to urge investors to have some exposure, right? Even traditional analysts are urging investors to have some exposure to Bitcoin and cryptocurrencies in general, to grow together with their precious metals portfolio in response to ongoing changes in macroeconomic trends. Now, if we take Arthur Hayes, BitMEX CEO, at his word, for instance, he recently chimed in with his outlook in his blog post, writing how he thinks that investors should buy as much BTC and gold as they can in preparation for what he calls the monetary regime shift currently in progress, and how central bank policies will flood the markets with cash in the coming years. So where do you guys stand on the Bitcoin gold narrative? This year has been fairly tough year to date, and probably tested the resolve and faith of a lot of crypto fans in March's massive crash, as it always does. If you guys think back to the end of 2018 or the beginning of 2019, there was a lot of confidence and resolve tested. You know, Bitcoin's price has since recovered and things are looking relatively sunny leading into the halving. But do you find the honeymoon phase of Bitcoin to be over? Have you become more cynical of what's to come, given the events of 2017 and now 2020's crash and recovery? Were you expecting an economic collapse by now and to be crypto rich while society crashes down around you? Or do you see this as the long road to victory, and that we're still in the maturation phase of BTC and cryptocurrency before it really proves itself as that hard asset like gold? Let me know in the comment section down below, guys.